On July 29th, a deposit is going to land in your bank account, and it will not match what you received last month. If you're a Canadian senior collecting old age security, your payment has shifted this month. It's larger than before. There's also a hidden threshold that determines how much of your money the government lets you keep, and that threshold just moved quietly. And for a certain group of people, that deposit on the 29th won't show up at all. 3 separate changes happened within the same week, and almost none of it was explained to you in plain terms. Over the next few minutes, you're going to see the new figures for your old age security and your guaranteed income supplement, exactly as they stand this month. You'll also see the new income line the government uses to take some of that money back. And you'll learn about one simple, easily made error that is currently causing payments to freeze for seniors who did absolutely nothing wrong. I want to say up front that it's this last issue, the frozen payment, that deserves your full attention, because it's the one problem here that can actually be fixed, but only once you understand that it's happening. Stick with this, because by the time we're done, you'll know your updated payment amount and whether you fall into the group at risk of losing it. What follows comes from years spent working inside the machinery of Canada's retirement, tax, and benefit system, understanding the pensions, the paperwork, and the quiet rules that control a senior's finances. This isn't legal advice, and nobody here is trying to scare you. The goal is simply to take changes that were written in a way meant to be overlooked and explain them clearly enough that you hold on to every dollar you're owed. Let's begin with the positive news, because there is some, and it touches everyone who receives old age security in this country. Your OAS increased this month. Every quarter, the government is required to adjust these pension payments so they keep up with inflation and the rising cost of groceries, rent, and daily life. The adjustment taking effect for July, August, and September this year amounts to a 1.2% increase. On its own, 1.2% over 3 months might not sound significant, but here's what it translates to in actual dollars, and this is the figure worth remembering. If you're between 65 and 74 years old, your maximum old age security payment now sits at roughly $752 per month. If you're 75 or older, that number climbs to about $827 per month. Pay attention to that gap, because many people aren't aware it exists. Once you hit 75, your old age security becomes permanently about 10% higher than what someone in their late 60s collects. That adjustment was introduced a few years back, based on the reasoning that the oldest seniors have typically drawn down their savings the most and depend more heavily on this pension. So if you've recently turned 75, your payment should have increased accordingly, and if it hasn't, that's worth calling about. These are the new maximum amounts currently reflected in the deposit arriving on the 29th. Add together all 4 quarterly adjustments from this year, and old age security has climbed a little over 2% over the past 12 months, all without a single notification letter showing up at anyone's door. So the first move to make once that deposit hits your account is straightforward. Actually look at the number, because it should be modestly higher than what you saw last month. If it isn't, that tells you something important, which we'll get into shortly. Because the OAS increase is just one of 3 things that shifted, and honestly, it's the least significant of the 3. The second change matters far more for a lot of you, since it can swing your monthly income by hundreds of dollars in either direction. That's your Guaranteed Income Supplement, or GIS. For anyone unfamiliar, the GIS is an additional tax-free payment the government provides on top of old age security to seniors whose income falls below a certain level. For those who receive it, this supplement is frequently what separates barely getting by from actually being financially stable. Here's the critical detail almost nobody realizes about the GIS. It gets fully recalculated every single July, not once at retirement, but annually. And that recalculation is based entirely on one factor, the income reported on your tax return from the year before. That means whatever you receive from now until next July is calculated using your 2025 income, the return filed this past spring. Consider what that actually means, because this is where it becomes personal. If your income dropped last year, whether you cut back on part-time work, an investment stopped generating returns, or a spouse passed away and household income fell, your GIS payment this month could rise, sometimes substantially, since the government now sees reduced income coming in. That could be money waiting for you that you're not even aware of. But the reverse is equally true. If your income rose last year, perhaps from a RRIF withdrawal, selling an asset, or cashing out an investment, your GIS could shrink this month or stop altogether. If you weren't anticipating that, receiving a smaller payment can come as a genuine shock. The maximum GIS amount for a single senior currently stands at approximately $1,123 per month. And remember, this money is entirely tax-free. It's not added to your taxable income, and you don't owe a cent of tax on it. Combine that with your old age security, and a single senior with minimal other income could be pulling in somewhere around $1,875 monthly between these two programs. That's a substantial sum, and exactly the kind of figure worth understanding precisely. Here's an example that illustrates the swing that trips people up. Imagine a woman in her early 70s living alone in a smaller Ontario town. Last year, in 2024, she picked up some part-time bookkeeping work over the winter. Just a few $1,000s, nothing major. This year, she stopped doing that work entirely. When her file was recalculated this July based on her 2025 return, the drop in income was reflected, and her GIS increased by more than $100 a month. She didn't apply for the increase or submit any paperwork. It happened automatically because the July recalculation finally caught up with the reality that her income had fallen. Now flip the scenario. Her neighbor, roughly the same age, withdrew $8,000 from a RRIF last year to cover a roof repair. Same July recalculation, but because his income went up, his GIS payment went down. If he wasn't expecting that, the smaller July deposit would have landed as an unwelcome surprise. Same rule, same month, opposite outcomes. That's how the GIS works. It's always looking 1 year back at income you've already reported. There's a related version of this for younger spouses too, which people tend to forget. If you're between 60 and 64 and your partner receives the GIS, there's a benefit called the allowance. If you've lost a spouse, there's a version called the allowance for the survivor. Both are income tested, both get recalculated this same July using the same 2025 tax return, and both can be suspended for the exact same reason the GIS can be. Keep that in mind because we'll circle back to it. So that covers 2 of the 3 changes. Your OAS has increased, and your GIS has been recalculated based on last year's income. But there was a third shift mentioned earlier, a quiet threshold that most people have never even heard of, and this one matters most to those of you who've done fairly well financially. It's known as the OAS recovery tax, though most people simply call it the clawback. Here's how it functions in plain terms. Old age security isn't guaranteed regardless of income. Once your income crosses a certain line, the government begins reclaiming a portion of it, specifically 15 cents for every dollar of OAS for income above that threshold. That threshold isn't fixed, it moves every July. For the period running from July 2026 through June of next year, the clawback line has risen to $93,454. In practice, this means if your net income falls under roughly $93,000, you don't need to worry about this at all. The clawback doesn't apply to you. But if your income exceeds that line, the government reclaims 15 cents for every dollar above it. And because the threshold moved this year, the exact point where the clawback kicks in is different from last year. Let's put an actual number to this, because 15 cents on the dollar can seem trivial until you see it in context. Say your income this year lands at $100,000, roughly $6,500 above the threshold. 15% of that comes to just under $1,000, meaning approximately $1,000 of your old age security gets reclaimed over the course of the year. The further your income climbs above the line, the more gets taken back, until at a sufficiently high income level, your entire OAS payment is clawed back and you're left with none of it. So this isn't a minor detail for the people it affects. And here's why the shifting threshold actually matters to you. Because it rose this year from around $91,000 to $93,454, the government is now allowing roughly $2,500 more in income before the clawback even begins. That's a meaningful cushion if you're close to that line, and it's exactly the kind of threshold worth planning around, since there are perfectly legitimate strategies to keep your income under it. These include splitting pension income with a spouse so it isn't concentrated on a single tax return, drawing from a tax-free savings account instead of a RRIF in a year when you're near the threshold, or timing a large withdrawal for a year when your other income happens to be lower. None of that is a loophole. It's simply understanding where the line sits and stepping around it deliberately instead of stumbling into it by accident. If you're anywhere near that threshold, it's worth having that planning conversation before the year ends, not after. While on the subject, let's clear up a point of confusion that underlies all of this, because it trips up so many people. Your old age security counts as taxable income. It appears on your tax return, and in a high-income year, it can even push you closer to that clawback threshold. Your GIS, on the other hand, the supplement discussed earlier, is completely non-taxable. It isn't counted, isn't touched by the tax system. 2 payments landing in the same account on the same day, treated in entirely different ways by tax rules. This distinction matters because it's exactly the kind of complexity that makes people throw up their hands and assume the whole system is too complicated to bother with. And that assumption is precisely what ends up costing people money. It's what prevents someone from claiming a GIS payment they're actually entitled to. And it's what leads someone to decide filing taxes isn't worth the effort. None of this is genuinely complicated. It's simply never explained in straightforward language. So now you know the 3 shifts that occurred this month. Your OAS increased, your GIS was recalculated based on last year's income, and the clawback threshold moved upward. If you're thinking that all you need to do now is wait for the 29th and check your deposit, you're mostly right. But there's one more issue, the one flagged at the very start as the most important thing to understand. Unlike everything covered so far, this one can eliminate your payment entirely, and it has nothing to do with how much you earn. Here it is. Every one of these recalculations, the GIS and all its related top-ups, depends entirely on one requirement, that you actually filed your tax return for last year. That's the whole trigger. Service Canada doesn't estimate your income. It reads it directly from the return filed with the CRA. If you didn't file your 2025 tax return, the one due at the end of April, then Service Canada has no income figure to base your recalculation on. And when that happens, they don't simply guess and continue your payments. They stop them. Your GIS can be suspended starting this month, frozen in place. It's important to understand who this affects, because it isn't who you'd expect. It very often hits seniors with the lowest incomes, the ones who owe no tax at all, and therefore reasonably assume they don't need to file a return in the first place. That assumption becomes the trap, because even when you owe nothing and your income is minimal, filing that tax return is the key that unlocks your GIS every single year. Miss it, and the benefit you rely on most is the very first one to shut off. Here's a concrete example of exactly this scenario. Picture a man in his late 70s living in a small town with a modest pension and his GIS payment as his entire income. He owes no tax and hasn't owed any in years, so at some point he stopped filing a return altogether, reasoning that there was no point if he didn't owe anything. For a couple of years, nothing happened. Then this July, his GIS payment simply didn't arrive. No letter he understood, no phone call, just an absent payment, and a man staring at his bank balance wondering what went wrong. The answer was nothing, except for the one detail nobody had told him mattered. He hadn't filed. He wasn't careless. He's exactly the kind of person this rule tends to punish hardest, the low-income senior who reasonably assumed owing no tax meant needing no return. And here's the part that should motivate you to file even if you assume none of this applies to you. That tax return doesn't just activate your GIS. It's the key to an entire set of benefits. Your GST and HST credit disappears if you don't file. Provincial credits and supplements, many tied to the same return, stop as well. Federal climate-related payments, where they still apply, also flow from that same document. One unfiled tax return can quietly shut off 4 or 5 separate income streams simultaneously, and most people never make that connection. So if your payment on the 29th is missing or unexpectedly smaller than usual, don't panic, and don't assume you've been permanently cut off. By far the most likely explanation is a tax return that never got filed, and the solution is exactly what you'd hope. File it. Once your 2025 return is submitted, Service Canada can recalculate your file, and in the normal course of events, restore your GIS, including back payments for the months you missed. The money isn't gone, it's simply on hold until that return is filed. If this applies to you, the single most valuable action you can take after learning this is to get that return filed this week, not next month. If you're not able to handle it yourself, free tax clinics exist in most communities specifically for seniors with modest incomes, staffed by real people who will sit down and file it for you at no cost. As for actually checking any of this without spending an hour on hold, the simplest method, if you or a family member is comfortable online, is through a My Service Canada account. Logging in lets you view your old age security and GIS amounts, your payment history, and any flags on your file. If going online isn't your preference, that's completely fine too. A phone call to Service Canada accomplishes the same thing. It's worth picking a quiet mid-morning on a weekday to call and having your social insurance number ready before dialing. Ask 2 straightforward questions. What is my current payment amount, and is there anything outstanding holding it up? That second question is what typically surfaces an unfiled return. Here, in short, is exactly what to do. When that payment lands on the 29th, actually check the amount against what you received last month. If it's slightly higher, that's the increase working as it should. If it's lower or missing entirely, don't panic, but ask yourself first whether you filed your 2025 tax return, because in the overwhelming majority of cases, that's the answer, and filing it resolves the issue. If you're a lower-income senior who has never claimed the GIS, this July recalculation is the ideal moment to check whether you now qualify, since your income may have dropped enough to open that door, and it's money that would otherwise go unclaimed. And if your income is approaching that roughly $93,000 threshold, it's worth sitting down with your numbers, or with someone knowledgeable, to understand exactly where the clawback begins to apply, since a bit of planning around that line can make a meaningful difference. To bring it all together, 3 things changed within the same week, and all 3 show up in that single payment landing on the 29th. Your old age security rose to about $752 a month if you're between 65 and 74, or about $827 if you're 75 or older. Your GIS was recalculated based on last year's income, which may have gone up or down, with the single senior maximum now sitting around $1,123. And the clawback threshold climbed to roughly $93,454. But of everything covered here, the most important takeaway is the simplest one. If your GIS suddenly stops or shrinks, check whether your tax return was actually filed. Because for the seniors who depend on this money most, an unfiled return is the most common reason a payment goes dark, and it's entirely fixable. The reality is that the government isn't going to call and walk you through any of this. These changes happen quietly in the background, and it's left to each person to notice them. The most powerful thing you can do is exactly what you're doing right now, paying attention, knowing your numbers, and understanding where the pitfalls are before they catch you off guard. If this was useful to you, share it with someone who needs to hear it, a parent, a neighbor, a friend nearing retirement who might otherwise miss these changes entirely. And if you've been through something like this, whether a frozen payment, a surprise clawback, or a GIS swing you weren't expecting, drop a comment about it, because you're far from the only one dealing with this. Keep an eye on that payment landing on the 29th.